Hello, this is Si Wing Yi from the Yi Real Estate Network. Welcome my members, real estate investors, whoever listening and viewing this particular video. It'll be a very short video. Once again, my name is Si Wing Yi, and if you have any questions toward the end of this video, feel free to contact me at my phone number is 510-552-0726, and you can also text me with the same number as well, because this is my cell phone. Some of you already know my email address, cwingyi@cwingyiseminars.com. This will be a short video. I'm not exactly sure how long it's going to take, maybe 10 minutes. This is a sort of a module 1. So for any serious investors out there, the best way to track, in my opinion, to track your investments, short-term and long-term, is to have the tools and resources available to you to monitor your progress with respect to your real estate portfolio, if you will. So I've been promoting this software for quite a while, propertytracker.com, and I highly encourage all the serious real estate investors out there. Many of you are for my membership or my members to sign up for this software. It only costs, I believe, $19.95 per month. It's an internet-based software. This company I've been using for like 10 years now on a personal basis, and many of my investors are using this software to track their real estate investments. And like I said, I don't want to overwhelm you too much, but I'm going to send, from time to time, I'm going to send you different modules. These are the introductory modules for those of you who are contemplating signing up for this, which I highly recommend. All right? So with that in mind, I'm going to walk you through only first for the next, I believe, approximately 10 minutes. And I'm going to use a scenario of one of the property that I have in front of me. I'm going to use a pro forma on the property located in the Bakken, North Dakota. This property is a real property, by the way, and that's what I'm promoting. We're promoting this property in Williston, North Dakota. And so without further ado, let me walk you through this video. So first and foremost, so when I'm going to click property data, okay, property data, okay, I'm going to click add. So the default is add, so I'm going to put the property name. It'll be property name for right now will be Williston, North Dakota.
Call from Ferguson Robert.
Half of a duplex.
Call from Ferguson
And
Robert.
I don't know the exact address yet, but
Call from Ferguson Robert.
for right now, I'm just gonna put down Williston.
Call from Ferguson Robert.
So sorry about this voicemail. Sorry. Anyway, so it'll be a 3-bedroom, 2.5 bath. It's a twin home. Okay. Okay, square footage on my pro forma shows a square footage of 1,427 square foot. Purchase price on this Williston property we have available is $279,900. The market value is also similar, $279,900. All right, so property name, everything's fine, so far so good. So I'm going to click submit this form. Always at the bottom, save the form, save this document. Okay, I'm going to click submit this form to save it. Then computer will directly the green color means I have completed this task. So the next task on this yellow tab will be enter mortgage data. All right, mortgage data. Don't know the lender yet, so it does not matter. So let's assume you're going to use a 25% down payment investment loan, right? So therefore, the loan amount will be 75%. Okay, the computer will calculate the loan amount is $209,925. Amortization 30-year mortgage and the interest rate would be 5% for investors. All these things I'm going to discuss is for illustration purposes. Is not it's just an illustration, okay? All right, 5% interest rate, no monthly P&I. So everything's fine. So therefore, okay, I've just completed the mortgage data. So at the bottom, click submit this form, and that's done. Then the next step would be enter evaluator data. So assume appreciation. Let's be very conservative, 3% appreciation for the next 10 years. Don't know. The gross rent in this Williston twin home is $4,000 a month. The lease is already in place with the oil servicing company employees. So as soon as you close escrow, you will get the lease in place at this estimated monthly rent. 1 year lease, annual renewable lease. All right. Property management fee, I believe, is 5%. No maintenance percentage because it's a brand new home. No HOA fees, so that will improve your cash flow. Annual property taxes, as I'm looking at my form, which you do not have a copy. I have a copy next to me. So the annual property taxes would be monthly is $250. Annual multiplied by 12 months equals $3,000. And then annual insurance on this property is monthly is $70. So annual will be $840 for property insurance. Okay. No leasing fee because the property will be leased upon close of escrow or before us in all North Dakota Bakken oil field properties that we've been promoting quite heavily for the past 18 months. Okay, so evaluated data is all complete, I believe. Yes, it is. And I'm going to click submit this form to save this particular page. Submit this form. That's done. So that's pretty much it initially, because the property have not generated any income. So I'm just doing an evaluation. So let's click on first year. All you need to do, right? Property data, mortgage data, and evaluated data. It only take a few minutes. Then you do a first year projection. Click first year projection of this property, and here are the numbers are very intriguing. Okay, first year projection, you will see the square footage of its home, 1,427 square foot, and then market price, down payment 69,975, and other costs. So initial cash invested 72,975. Then it shows monthly and annual. Monthly rent, annual rent. If you scroll down, you will see the monthly property taxes, monthly insurance, management fee, monthly. Then you have the net operating income right here, 3,480 minus the mortgage payment per month of $1,127. So your net monthly cash flow on this illustration is $2,353. And of course, the annual cash flow is $28,237. All right. Then it has some the projected principal reduction based on the pay down and the first year projected appreciation at 3%. Very, very conservative. All right. So the bottom line, what you're looking for from a high level, basic high level, is your net cash flow, which is very attractive, $2,353. And of course, if you look at over here, you see the mortgage data, 25% down payment for those of you that qualify to get a loan. Very attractive, 5% rate. And although I don't want to go over all the financial indicators, but the most important thing you need to learn is your investment yield, the capitalization rate, which is 14.9%. Very attractive. The typical capitalization rate on a typical cookie cutter, homes, like $100,000 homes in other markets, at this point in time, you're only going to get like 5 or 6% cap rate. But in this case of the oil boom, real estate boom here in North Dakota, in the Bakken, the cap rate is almost 15%, which is extremely attractive. Cash on cash return. By the way, the cap rate, if you go further, the cap rate is the net operating income divided by the purchase price. So the net operating income, which is 41,760, right, divided by purchase price of 279,000, equal 39% cash on cash return. I'm sorry, equals the cap rate. I'm so sorry. All right, so very important calculation to understand. Then the cash on cash return is 39%. Cash on cash return is the annual cash flow divided by the initial cash invested. If you go over here, annual cash flow is 28,237 divided by your total cash invested, which is your down payment plus your closing cost, 72,975, equals 39%, which is very attractive as well, right? So really, that means at the end of the first year, you have recouped 40% of your down payment through the cash on cash return. Then finally, the last calculation I want to touch on is the total ROI, which is return on investment. If you look at here, the total return on investment is the annual gross equity income divided by the initial cash invested. Annual gross equity income. Let's go over here. Annual gross equity income is 39,731 divided by your initial cash invested, which is your down payment plus closing cost, 72,000, right? So 39,731 divided by 72,975, your initial cash invested. So your total return on investment is 54%, right? What does that mean? That means in a mere 1 year, you have made your money back from your down payment, almost more than half. So at the end of the second year, your total return on your investment should equal your down payment. See, that is your at-risk down payment. Beyond the second year, everything is good to go, right? Everything is a bonus. Everything is all cash flow. Your money, short-term, long-term, is your money, cash flow, appreciation, whatever, right? So very, very attractive. So how much time did I spend? I don't want to spend too much. I have future modules I want to continue with. So the other things I want to show you is, let me see. Yeah, let's go on to the next thing I want you to do is click under contact, right? So whenever you purchase your first initial property, you're gonna run into a number of people that's helping you. So therefore, the property is this property right here, Williston, right? Half of a duplex category. So what I want you to do is the people you're going to be talking to are potentially lenders, right? The loan agent, for example, right? So my loan agent is for Williston, for North Dakota, for example, because I already built into my software. So let me share with you who are my lender. For example, my lender is Jason Gaudreau. So I'm going to click under. My software is very advanced because I already inputted all the stuff, but you have to input the information. Loan agents. Okay. So my own loan agent is, like I said, Jason Gaudreau. Right here, okay? So he's right here. Security National Mortgage, Jason Gaudreau. So, for example, if he were to email you something, what you're going to do, you're going to go to your email server, like on my email server. If I find Jason Gaudreau information, he and I communicated by email from time to time. Let's pretend, okay, let's look at some of his old email. So if he were to email you something, what you should do, you should copy and paste. Copy, right? Whatever email correspondence you communicate with those with your important people, you copy and paste. Then after you create the contact information for him, his name, phone number, email address, right? Then you start click add correspondence, right? You click add correspondence, you see? Then you you spend 10 minutes on an email. Then you paste the email correspondence, you see? See this? Then you click submit this form. Then on the correspondence log, you will see you click update list. See, you will see all the correspondence that I did with him, right? And see, this is the email message that you copy and paste from your email server. So you spend 10 minutes, today's date, 7 January, right? So, and the time that you spent. So all these email correspondence, copy and paste, are secure on the software. So you have a tracking methodology. So I think that's all I need to do. Let me see, no, maybe not. So let's go back to, so I created contact information. So the other contact information you should create is your, your realtor information, your loan agent, the title company, the property manager, whoever they are, right? Go ahead and create the contact log with the correspondence log. So I'm not going to go any further because once you close escrow on your property, potentially on this property, then you could start inputting other information. You can start inputting the leases. Let me. If you click on the lease, okay. Once you get the lease, you would update under the lease category. Put down whatever. The contact information for the tenant, whatever. Right. Put everything down, and also insurance. Once you obtain the property insurance on the property, you just input it under contact, right? Put down the name, phone number, addresses, email, whatever. Same thing with property management contract. Okay, when you secure the property with the property management, you put down their point of contact, the address of property management, their email, website, whatever. Okay, and then you click on view calendar. See, you will see. You will see on any given month the property when it's rented and so forth and so on. So there's a lot of great information, and also once you receive your first monthly income on your rental check, whatever, or you pay your mortgage, you click income and expenses. So every month you put down the rent, the mortgage you pay, insurance, and everything else. Right, and you click submit on every month. Sometimes there's an autofill. I don't want to discuss this at this moment. So I don't want to make this video too long, but that's all I want you to go over. So very important. Even though you're buying your first property, you probably have not closed escrow yet. This property tracker software is very, very valuable. Over time, as you input all your income and expense information on your property, at the end of the year, you just click print your financial data and submit the form to your tax accountant, and they will prepare your tax return for you, right? Great tracking methodism. So this is just a module 1 as a basic introduction. I will provide module 2, 3, and 4 on this property tracker so you can continue to be educated. All right, that's all I have to say at this moment. And this is Si Wing Yi from Yi Williston Network, and I'm gonna sign out and thank you for attending. Goodbye.